Hi. Fee chain has pumped by almost 11% today. So it's time to use the Wyckoff lens and take a look at what the whales are doing. If you're new to my sessions, I'll cover the Wyckoff stage, any trend change potential, as well as key price levels. And these are education content only, not financial advice. The fee chain weekly chart has showed a very decisive move by the bulls. It's still within the paper hands, diamonds hands testing stage. Don't get it wrong, that it's going to go straight into the next distribution. It's not there yet. It's still at the early stage where the bulls are trying very hard to defend the bottom that's been indicated by October 10th. When I say bottom, it's not the bottom that we can rely on, because that's only a short-term or near-term bottom showed on the October 10th tariff announcement date. But if we go back to the history of fee chain back in 2018 all the way to 2020, it has gone to a way lower point. So that's why the bulls are trying very hard to not let the price go beyond this level of 0.0096 that's tested both during the week of October 10th last year, as well as multiple occasions during mid to end December last year. All right, so they are defending very hard. Last week, they got to a point that's very close to breaking that level. And now we see this wick from a bottom. There's still 6 days and 7 hours left, so still early for this week. And from the big picture point of view, from the Wyckoff stage, it hasn't changed. We are still waiting to see the bulls to gain momentum, meaning the couple of long white candlesticks plus long white volume bars heading towards the yellow key level of 0.035, because that's where the automatic rally was. Okay, that means what is automatic rally, right? It's the trading range top when the price first dropped from the peak. Setting that top over here, that's supposed to be the sideways trading range top. July last year came close to test the ceiling, but never after that. So we're hoping to see something called sign of strength in Wyckoff terms, meaning, like I said, the bulls push it to challenge that trading range top. Knowing the big picture, let's get to the micro. Here, the downtrend that started after the October 10th, tariff announcement. Initially, the downtrend already started back in September, but that date pushed the downtrend to, one level lower if you consider it's like a multi-story apartment, all right? Originally, it's going down the slope, and then that particular day pushed it to another slide. And currently, it's still trading around the center line of the channel. I've showed or shared previously a couple of dates. Obviously, 23rd of Jan, the stretch target didn't happen. So the next few dates that a potential trend change confirmation would come, meaning turning from this downtrend to a sideways trend. The one that's slightly more positive is 12th of February. Why I say it's slightly more positive? Because the price over the past week has been trading below that level of 0.0114. So the bulls have to have sufficient support to push to the triangle above to catch that date. Well, sometimes they do it very close to that date, just do it in 1 to 2 days and go outside of the downtrend. If it doesn't, if the price continues to challenge this level that I mentioned in the beginning of the session, 0.0096, then we may have to get to near the end of February or even early March for the price to trade towards that triangle and confirm a trend change. A more pessimistic case that if it really breaks below this 0.0096, the next intermediate support will be 0.0081, and that leads to almost the end of March. It's still early. We're still almost 2 months from end of March. So next week, when we come back to look at VeChain, we will see whether the bulls are successful in defending or breaking outside of this downtrend. If you're interested to access these sessions 2 days earlier than the others, it's time to join the channel membership now. I'm moving on to the next session, and here's a video that you may be interested in. See you later.